market had a big gap down today, largely based on the tariff news. So gap down about 100, maybe 90 points. So pretty big gap down. However, Trump did say that he would be pausing the tariffs on Mexico for about a month for some negotiations to happen. So that looks like that was what caused this jump here. Now I have some information to pull up. 82% of Mexico's exports go to the United States. So by United States putting that tariff on Mexico, that is very impactful on their economy. And this is what J.P. Morgan is thinking. They put out an article. They predict that Mexico could enter a recession if tariffs imposed by Trump were sustained. So if those tariffs were to stay on, that could cause Mexico to go into recession. So really important for Mexico that those tariffs do not stay up. And it's still impactful for us. The economy does not benefit from tariffs, even though imports from Mexico are a small percentage of the economy. It's still impactful, although it's not as impactful on us as it would be on Mexico. It's a big gap down today. The first two bull bars, I was thinking this looked like a good buy above these two bull bars if the market went above it. So I'm going to mark this, with the thought that if it goes above it, then we would buy. But the bar did not actually go above it. Oftentimes in the open, when you get two consecutive bars, both closing above their midpoints and one closing strongly, then you can bet on that to continue. And maybe more than 20% of the time, that'll be the low of the day. So if you get this situation and it goes above that second bar, more than 20% of the time, this will be the low of the day. And then you'll catch a large move up. Then the 80% of the time, 75% of the time will be stopped out. But then that 25% of the time you're right, you're going to get a huge trend up. But bar didn't go above it, so either way, that's off. I was thinking the market was going to continue to trend down. So, I think it's reasonable to be marking like a short like there. Also a short here. And I think I think this is reasonable to be short in here, where the bulls failed on the open to try to go up, where after this big gap down, probably going to get more down. And then basically, I think this is just tariff news, this big bar. I mean, this is a 50 point bar. That's a news bar. So some news came out that was bullish there. But as far as outside of news, just looking at these bars here and getting short, I like the idea of getting short below these bars. You can also look at this being a double top here. So 3 bars down, then you get this little bull doji bar with this big tail. So that'd be the first top. That tries to go lower. It goes up again. So this would be like the second part of the double top. And then you get a bear bar going down. So double top, bear trend. I like trying to sell below these bear bars, even though you would have lost. But this is just a news bar, so that's, you can't really predict that. After we did get this big bar, we also got 2 follow-through bars. So, what some people will be doing is buying the close of any of these 3 bars, betting that there's going to be more up. And, that's reasonable. After a 50-point bar, there's something going on to where the news is bullish. Something has changed and the market is now bullish. Maybe there are concerns about trying to sell into the moving average and also concerns about trying to sell into this 6,000 number, and that's okay. But after this large bull bar, and especially after 2 follow-through bars, there's probably going to be at least a little bit more up. And, we got at least a little bit more up here. Ended up getting, at least 20 points more up. Another thing you could be looking for after these 3 strong bars is a measured move up like this. And, looking at the market now, as we're starting to try to break out above these highs, it's possible that before the end of the day we could get up to this measured move target. But a problem with people trying to buy above this price where it is now is that we're coming into a lot of resistance. So the first thing you can see, we have this gap that is still open from Friday's close and Friday's lows. So the market has done a great job filling this gap, right? Initially, when the market opened, we gapped way down, and the market's been working back the whole day, and now it's up like this. So in this last hour and a half, we could close this. Although I feel like so far in January this year, the gaps that have been getting close and then not filling. So, there might be a little bit of recency bias that this gap might not close because of that. But we're getting close. It might fill. But we're coming into the lows of Friday, the close of Friday. Coming into the 200 period moving average. And then we would also be getting up near that measured move target up here. So as we get higher, I think more and more bulls would be taking profits, and more bears would be, starting to short to try to make scalps. So I would be hesitant to try to be buying if we get any more. If we get maybe a couple more bars up, I would start to hesitate on trying to buy, because we're coming up into an area where bulls are taking profits instead of aggressively buying. So that's what was kind of my thoughts on this measure move up. Then these 3 bars, or really these 4 or 5 bars here, this is all a breakout, right? It's kind of a surprise. Something's changed. After you get a breakout, then you normally lead into a channel. So there's our channel. So breakout channel. Then the third stage is a trading range, which we've been in right here. Then we're trying to break out of this trading range. We've had 2 bars closing above the high of the trading range. It could be the start of the breakout. I mean, I think it needs more, and I'd prefer to see a test back of the top of the range before, aggressively buying. The reason I wanted to point out that the market cycle here about the breakout and the channel and the trading range is because people might have been thinking about trying to get short in here, and I was considering it. So let's talk about the pros of trying to short below one of these bear bars first. Well, it's a lower high double top. So here is the high of the move, and then we have a high here, and then a high here. So this here is double top, this high and this high. And then this double top is happening below this high. So it's a lower high double top. Also, we're starting to get closes below the moving average. So this is the first close in a while. And then here, this looks like this bull bar failed to go higher, and now we're getting closes below. So some people might have been going short, maybe below this bear bar, or getting short somewhere through here. And I thought about it, but I figured it'd be a mistake, because after this breakout and then this channel, now we're in a trading range. So I really wasn't thinking of this as being a bearish reversal where we were going up here and now we're going to be reversing down. I was thinking of this more as, all right, the market cycle is playing out. We have a breakout channel, and then now we're in a trading range. And then when you're in the trading range, you should be buying low in the range, buying below previous bars, buying closes, instead of trying to sell low in the range and sell below bars. So that told me I shouldn't be selling down here. And if anything, you should be buying. And buying would have been the way to go right in this area. And so when we're in this trading range, we need to really wait for a breakout first before betting on the breakout. And so possibly we're getting the breakout here. I think we need more to see more. But so that's the reason I did not want to sell here, because we were low in the trading range. Even though there were signs of a reversal, the the chance of the trading range was more important than that. So as we got more bars, I do have a buy marked here, and I'll show why I liked the idea of buying. One, we had this breakout earlier in the day, and we've basically been sideways since then. Oftentimes when you get a breakout that sort of hesitates for a while, it'll have a second attempt up. And I think that's where we're getting here. So when you get a strong breakout, sometimes it'll just continue up pretty quickly and you'll hit your measured move target, as quickly as the first breakout was. And other times you'll see this strong move like this, and then you kind of have a few pullbacks and the day kind of drags on. And then later in the day, you end up getting a breakout attempt. Not saying it goes up to the measured move, but then you do end up getting a second leg of some kind. So understanding, just from experience, understanding like that's what happens, then I was trying to look for some long somewhere in here. Even though it was coming up near the top of the range, I thought it would be okay to be betting on that second leg based on the time of the day and the larger context that we would be looking for a second leg up from this breakout. So another thing was we were having some bears fail here. Just as we were talking about how people might have been considering getting short through here, well, they were wrong. That was not the place to be getting short. And then look at these attempts down. Right, we have this attempt here, which created these lows. We went lower here. We went lower again, and then we got these really big tails. So bulls really aggressively bought when it got here. Bought on this bar here, then bought again on this bar. I mean, really, those are really large tails. Those tails alone are 20 points, 15 points. And then we start to get higher lows. So this is the lowest low of the move. And then we get this double bottom here. That's higher than that low. And then all of these bars start to have tails that are higher than the prior low. Now we're getting close above the moving average, and whole bars above the moving average. And then you get one more attempt down by the bears that fails. You get this big tail on the bottom, and then a good looking bull bar. So I think buying there was reasonable. Betting on not necessarily going up to the measured move target up here. I think you could do that. You could try to bet on that, but I think it'd be better to just try to go for, I don't know, probably just go for 1 times your risk. If this was a normal day where the normal bar was like 5 points tall, I would say just go for 5 points. But since these bars are like 10 or 15 points tall, then I think you need to be going for 10 or 15 points. So you put your stop below that, and then go for, in this case, it'd be go for about 10 points there. And so that's how you would trade that. So that's what I've got for today. I hope that made sense why it was okay to bet on the breakout here, while it was not okay to bet on the breakout here. It was because the context was different. I think the bars, I think the bars themselves, the individual bars, told the same story, but the larger context was different on why this would not be a good breakout, but this was a good breakout. All right, guys, thank you so much. It's Monday, so we got 4 more trading days, and let's have a good week. See you guys tomorrow.